Welcome to our numerous guests and listeners. We have over 100 registrations for this event, which is great, I think. Mr. Shep, you already said, I think, the most important things. Christopher Weafer is the CEO of Macro-Advisory, an agency which is specialized in strategy consulting for companies operating in Russia and the Eurasian region. Christopher, you will talk about two topics today. One important topic is how the Russian economy can recover from the serious consequences of the Corona crisis. And the other question is how to proceed with the billion-euro national projects which were initiated by President Vladimir Putin to support key sectors of the Russian economy. A short note to all our guests: there is a possibility to ask questions and during and after the event via the chat function. And there is also a translation into Russian and German. You just have to click on the button interpretation on the lower bar of the screen. And now I turn the floor over to Christopher. Have fun, everybody. Welcome.
Hey, oh God, excuse me. Good morning, everybody. And thank you, Matthias and Thorsten, for inviting me and for arranging this event. I'm just going to my screen. So today we're going to look again at where we're at in the economy. I mean, look, the first thing I suppose to say and to make clear, I suppose, is the standard economist's excuse, which is that there are still too many variables to be really sure about where we're at in the economy and what we're going to see over the next in the rest of the year into next year. We're still waiting to see what will be the impact of some very important factors. Of course, the COVID-19 crisis, which everybody's so familiar with on a day-to-day basis, and how long the lockdown and the restrictions will take place, and what will be the recovery, etc., which we'll go through in the presentation. So this will be obviously a huge factor in what shape we see the economy for the second half of this year and coming into next year, because it will critically have an impact on budgets and government resources and what they have to use. And secondly, of course, the oil price, of course, which is an additional factor for Russia. It seems like we never have a crisis just based on one factor. There's always a combination just to make sure there's a crisis. And we have, again, this double whammy or double effect of the global virus as well as the oil price. So we are kind of in this phase, and we are kind of working through it. And as we go through it, we're starting now to get the data. And only yesterday, in fact, yesterday evening, we saw the data for April for the first time. And of course, it was as bad as we kind of expected in the sense of a downturn. And of course, in April was the worst. Hopefully will be seen as the worst, but of course a severe lockdown, and that's now coming clear in the numbers. So I'm going to put up the presentation, and I believe it is available. So where's my share screen? Thorsten, can I just check with you? Are you seeing that screen? Okay.
Yes, I see it.
That's great. Okay, so always worth checking. So that on it, and I'm not going to go through each slide. I believe it will be available afterwards. For Thorsten will send it to you, or HK. But what I will do is just to make sure I've got this right. If we look at at the economy, we're at year to date. We'll say we're only just now starting to get the numbers. The last set of data we really have had is March, so the graphics have not been updated as yet. They will be over the next couple of days. And it's very much a case of let's get the good news out of the way first. And the good news really was the first quarter generally is good news. What this graph here is, it's the leading indicator. It is a very accurate replicant of GDP. The GDP numbers always come out late, but the leading indicator is a good indicator, and always historically it was a good indicator. So you can see in the first quarter we had indications of GDP 1.7, 2.8, 0.9. We know the provisional number for GDP in the first quarter was 1.8%. And it was, it's a shame in the sense that the government program to revive the economy was actually working. Last year, as you know, there was a lot of criticism over the slow pace of spending on national projects. In particular, we heard that a lot from Alexei Kudrin in the audit chamber about how little money was being spent. We heard Putin's frustration starting to grow later in the year. And of course, it's one of the reasons why he changed the prime minister. That the current prime minister is certainly much more of a sergeant major, I suppose, a manager to force people to do things. And he's shown that in his previous role in the tax ministry, he can get things done. And that was starting to happen. And the second thing that was happening in the first quarter was, of course, the rise in the consumer spending. So the consumer sectors and services sectors were all had a very strong first quarter, and that was on the back of rising wages and rising incomes, as President Putin had promised people that he would deliver on, and he was starting to do that. So real wages were going up, and we saw that then on the effect on the on retail. But unfortunately, that's kind of the good news all came to an end. And if we look at these two graphs here, oh, I do apologize, sorry, something in my throat. These are activity indicators. The top one is manufacturing, the bottom one is services. Now, they just to make sure you understand what these are, they are indicators of what companies are currently doing and what they expect over the next month. So they're not really confidence or medium term, they just reflect the current situation. And essentially those two lines collapsing basically reflects the fact that companies see that they weren't going to be doing a whole lot in May. You know, a drop in inventories, a drop in orders, and therefore, you know, and obviously most businesses being on furlough or on vacation. It is a percentage change on the previous month. So it can change very quickly. So not something to be overly depressed about. It is certainly an extraordinary drop, but it can reverse once we get recovery. And I guess I should show the 2009 numbers for comparison. The last recession, or deep recession, which also had not quite as bad as this, but it did recover on it. But the bottom left does kind of indicate what we are now seeing with the April numbers. Of course, people and consumers that had been the strongest part of the economy in the first quarter, all planning to reduce spending, particularly on, should I say, discretionary items like entertainment, etc. And that's exactly what they have done. So if we look at yesterday's announcements from Russland, you can see that retail sales were down 23% in April year on year, and 37% down in durable goods. And of course, previously we know that the numbers came out earlier showing there was a 70% decline in vehicle sales, none of which should surprise us. So a headline saying, oh, it's going to be terrible and this is much worse. No, look, that's not the case. This is my fourth crisis in Russia. I mean, I've been, Matthias mentioned, we've been here for a long time. And, you know, every time you get a crisis, there's always a line of people who are ready to go out in front of the cameras or to make announcements about how this time it's different and how this time is going to, you know, create social and political instability, and it's going to, you know, really disrupt the whole system. And of course, that's not the case. You have to look at these things in a proper context. Yes, you've seen a very sharp reduction, and in Russia, you tend to get greater volatility than you were used to, say, in European markets. In other words, when there's a recovery, it tends to be very strong. When there's a decline, it tends to be very steep, but it reverses very quickly. So one should always be very wary of anybody who starts off a speech saying this time is much worse or this time it's going to be different. There are differences, but very rarely do you get that kind of real major gain changing. And I don't expect it this time, and I'll show you why in a second. This graph here, and I apologize, is not something to try to, you know, forget the numbers. It's a visual interpretation of activity. It comes from Sberbank, and therefore it is reflective of the whole economy because Sberbank, of course, have a dominant position. And you can essentially see the deep red lines are the worst hit sectors. The deep green lines are the better sectors. So you can see that in late March, early April, there was kind of more deep red. as people were basically not spending and staying at home and being fearful and not even allowed out. But now in the most recent graphic, you can see that the deep reds are beginning to become fewer and the green is becoming a bit more. Again, it's reflecting the fact that people are out more, they're spending more, but you can see they're starting to spend more on online, which again is something we had seen in Russia anyway, but this crisis is accelerating the online commerce and online entertainment and online living. And of course it is back in Germany and in other European countries as well. And we can see that in Russia. So again, reflecting the fact that we're starting to open up and move forward. And so those retail numbers, they came out yesterday showing a 23% decline overall and 36% in durable goods. Those numbers will be a lot better in May based on this indicator here. The reason why we're not looking at a collapse is, first of all, Russia actually is much better placed, and that's important. And I'm not going to sit here and say that sanctions have been good for Russia. Sanctions are never good for anybody whatsoever. But Russia was at least put in a position in 2014, 15, 16, where the reality was it had weak oil revenues and it had sanctions, and that forced a behavioral change. It forced a strategy change from government. And the net result of that is that the economy coming into this crisis, first of all, the budget, much less vulnerable to oil price volatility than ever before. And you can see that. I just put up those numbers as an illustration of that. The budget needed $115 in 2013. And last year, it actually would have balanced at under 50. This year, it looked like it was heading towards balancing at about 46 or 47 pre-COVID, pre-oil collapse, etc. So a big change, and it puts Russia in a much better position, for example, than Saudi Arabia or the high-cost US shale producers. So this, again, these headlines saying that Russia was going to be destroyed because of weak oil and the Saudis and the US are colluding. Of course, that was all political nonsense. There is no basis of that whatsoever, either in terms of that collusion or Russia's vulnerability. Russia, in actual fact, of all the major players, is in a relatively better position because they have been forced to. Again, had we not got sanctions, Russia probably wouldn't have taken this action with regard to the budget or the currency. But anyway, it is what it is, and they did. And the second thing, of course, was the ruble devaluation. So ruble devaluation, which was forced on the country in 2015, and the fiscal rule, which changed the exposure of the budget to oil. These two items, or these two actions, have really changed Russia's position and left more comfortable. So you can see there's more money available to fund recovery programs, to pay for stability, and there are no questions about debt servicing or having to scramble to repay foreign debt, as was the case. It basically means the government has more options this time. As I mentioned, this is my fourth crisis in Russia observing, and this is the first one where the government at least can take its time. It has options. It does not need to panic. Now, it has been criticized, I know, for being too vague, I suppose, or being a little bit too relaxed with regard to actions dealing with the COVID crisis. I guess some critics or people thought the government should be rolling out kind of a more detailed plan or kind of more comprehensive plan, whereas we do know from talking to various ministers and others in government, their position is that it's much better just to deal with the crisis as you see it, as it evolves, in other words, week by week, and then kind of take more time to kind of reflect on the situation and then come with a better plan that's more realistic. And that's what I would expect in June, based on what I hear from talking with the different people in government. So yes, you can say that it's been frustrating that we don't seem to have a kind of a very clear vision of where the economy and the recovery is coming over 6 months. But I think that, but they've told us is that's deliberate. Whether it is or not, at least that's what they're saying. And there is no need for the kind of the sort of panic we had before. And that does put Russia in a better position to say there's money is available. That national fund of 160 billion, by the way, just to address that, that's not all cash at this stage, because of course the Sberbank's equity from the central bank is into it. there's about 80 billion of cash, but that's still a couple of years of deficit based on what Siluanov is saying, without any borrowings, without any other changes, which we will get anyway. So just to illustrate, there is money there. In terms of the ruble, because their ruble flexibility has been a big factor, a very important factor, a positive factor, you could say, overall for the economy in recent years. It has helped, of course, create a more competitive environment for domestic producers. It has for exporters, of course, in particular those in the agriculture sector, will see that. And of course, it has greatly helped with budget management. So it is probably the single most important reason why the break-even price for oil has come down in the budget, is because, of course, the ruble translation. The central bank are sticking to what they have previously said is their strategy or their practice, which is they are not interfering to support the ruble. And there is no evidence that they have spent any money in defending the ruble in the last couple of months. The changes in the foreign exchange reserves are more to do with exchange rate changes in the euro and the yen and sterling, etc., against the dollar. Central bank have learned that lesson in 2015. If the oil price is collapsing or if it's moving steeply in one direction, there is no point in fighting it. The ruble will go in that direction, and then you wait until the oil price is settled, and then, quote, you manage the rate back to where you want it. So basically, the central bank and Siluanov have both said and confirmed recently that the government still prefers to see the ruble-dollar exchange rate at 65 over the medium term. But how quickly they can get it back there, and then, of course, the euro exchange rate relative to that based on market mechanisms. So they're targeting the dollar rate. That's their kind of like target, and then everything else is by default. But they still prefer to get it back to 65. Clearly, it will depend on the oil price over the medium term as to whether they can achieve that or when they can achieve it. Obviously, now the oil price has gone up to, I think it was 36 yesterday, and the ruble was just under 72 against the dollar. So moving in that right direction. I'm not going to spend much time talking about oil, just to simply illustrate or to say that the reason the oil price has has recovered relatively strongly from where it was at the end of April is because, first of all, the demand side is not as bad as feared. If you're out in the traffic in Moscow, you can see that the roads are not quite empty. There's still plenty of traffic, and the pictures from Asia shows, again, people are moving about. And even in Europe, you're starting to see a bit more movement. So the worst case scenarios for demand certainly appear to have been avoided. And that's good. But the driver of oil is always the supply side. It's never the demand side. So there is optimism that the countries that have committed to cutting oil from the 1st of May, the OPEC plus countries and the US, that they're actually honoring that. And so this rally is based on that optimism and reflecting the statements being made. The hard data to show that one way or the other will come in June, early June. So in the next couple of weeks, that will be the next test for the oil price. So if the numbers justify the optimism, the oil price will probably stay in the mid-30s. If there is disappointment, we'll probably go back down below 30, and the ruble will go back up to 75 or 76, at least as a reaction. So watch the reports of production from Russia, from OPEC, and particularly from the US producers. That's what will determine where the ruble is. But don't expect the oil price to rally strongly or continue, even if the production cuts are as promised, because now you have a factor with Russia and Saudi, who are now very aware of US production, US shale, and they do not want US shale to recover as strongly as it used to be. And of course, you hear that in particular from Mr. Sechin of Rosneft, who is very angry with the whole US shale position. So it'll be a more cautious recovery, even if everything else is looking good. So it kind of suggests that we get more volatility in the ruble in June, and where if the central bank is able to manage its ruble position, could be in the second half of the year, will depend on that. In terms of where we're at in this phasing, in terms of government reaction, as I mentioned, that the government has been criticized for not rolling out a plan. But they say that there's no need to make guesses. They leave that for the economists and everybody else, so they'll wait. and that's what they're doing. So the way I look at it is these 5 phases, and this, will obviously have a very important, I guess, implication for people doing business in Russia as to what we can expect from the government in terms of budgets and policy changes and any other changes. So phase 1, you could say, we're either at the end of or coming to the end of, we're in that transition phase 1, phase 2. So phase 1 clearly was dealing with the crisis as it evolved, and every country has done the same, week by week, putting on new restrictions, and now kind of starting announcing the recovery programs. Matthias mentioned the Victory Day parade on June 24th. So I guess the government is expecting that they'll be able to allow gatherings at least by that date. So they're showing optimism. And also, actually, I discovered yesterday, they still have not cancelled the BRICS summit. This was obviously the summit between the leaders of the 5 BRIC countries, China, Brazil, India, South Africa, as well as Russia, which is scheduled to take place in St. Petersburg at the end of July, and the same week as the summit of the Shanghai Cooperation Organization, the SCO. Both of these events are still scheduled. So I don't know whether or not they'll take place or not, but it just kind of reflects, I suppose, the government is generally looking more optimistically at the easing, and certainly not planning for the dreaded second wave, a second spike of viruses, etc. So very much the end of phase 1. Phase 2, we are told, will involve the first budget adjustment. And this is something we know all government ministries and agencies and federal governments, etc., have over the last month or so have been submitting their revised budget plans to the finance ministry, highlighting kind of areas of greatest importance to them. Supposed to highlight areas that can be delayed, where they can save money. So we understand that all of those submissions have now been made, and that the finance ministry is collating them and compiling them. And we also know anecdotally there is a very big row over what should be done between Mr. Belousov, the first deputy prime minister, who generally wants to minimize the cuts and wants to run a bigger deficit and to fund it with borrowing. And he is opposed by Mr. Siluanov, the finance minister, who wants to have bigger cuts so as to keep the deficit low and therefore minimize any additional borrowings or drawdowns from the national fund. So we do know there is a big internal dispute between these two, at least, over that, and this is now ongoing. And we have been led to believe that the revised budget should be produced in early June, but it should not have any proposals for tax changes or for any kind of big measures, any surprise measures. It's kind of more a budget to reflect the fact that we're in crisis, things have changed, the oil price assumptions will come down, the ruble expectations will change, and that. So very much a first step, a holding change. Then what we are told is that the government is planning to spend the summer months basically having a kind of cooler reflection on kind of what has happened and what it means. And I suppose a lot of companies will do exactly the same. Up to a couple of months ago, all companies, all people, all governments had an expectation of what they were going to be doing in the next couple of years. And that's now all changed to some extent, depending on what your business is. So I would expect companies, as well as the government, or as the government is saying, spend the summer months reflecting on it, and then coming with a more comprehensive budget review in the autumn. And again, Siluanov and others have steered us towards this expectation. And they say that's when you're likely to see the more detailed changes in terms of the next several years with regard to national projects. And it's possible we'll get tax changes there also. What Siluanov has said was any tax changes will depend on what the government's view of the oil price is. In other words, if the oil price is low and looks vulnerable, you will get extra tax changes, maybe more significant tax changes, because as a source of revenue. Whereas the oil price is recovered or looks strong, then the pressure clearly will be less. He has, and others have said, that there is no discussion about increasing the tax burden for consumers or for people. So VAT or or perhaps other utility taxes are not going to be touched at this stage. That would be in keeping with Putin's commitment also. He's also said that there is no plan to raise a corporation tax. So again, that's in keeping with what Putin has said. Instead, I would assume that the extraction taxes, so companies in the extractive industries, will face more taxation. We know this is something that Mr. Belousov anyway has proposed previously, even in the good times. He believes that extractive industries should be more heavily taxed as a resource tax, that money used then to fund other programs. So he's in a driving position right now. I would expect that program to come back on. And the second thing we can expect is an end to the flat tax. So 13% on all earnings, it looks like that those days are coming to an end. And we can expect some sort of a graduated tax system, so higher income earners paying a higher rate of tax. Again, this is something that was kicked around before. You know, Arkady Dvorkovich, when he was in government, talked about this. It hasn't gone too far away. And we know the Kazakhstan announced this 2 weeks ago, I think, certainly in the last couple of weeks. They announced that they're bringing an end to the flat tax and go for a graduated tax. And again, this, I would assume this is something that's been discussed within the European Union or the Eurasia Union. So we can expect that. And Putin has already, of course, talked about and indicated the wealth tax. So this is the sort of changes what I would expect. But what we'll be really looking at will be changes with regards to national projects and whatever kind of initiatives the government put in place. And then here we'll be looking at localization policies. Again, it's back on the table. It always has been anyway, but now with a little bit more force. There's no indication that Russia is looking at isolation or protectionism or tariffs. That's not the case. We've really been trying to, you know, discuss this and ask this, and I guess this is something that Maxim Orishkin will be speaking at the event tomorrow, will address. This is something he's very close to. So it'll be really interesting to hear what his now current thoughts are on that. But there's no indication that Russia is looking to kind of make life difficult. If anything, we hear it's more a case of what incentives can we put in place. Yeah, the stick will definitely be there for later, but they will be a shinier carrot, the incentives to start with, but the stick will definitely be reinforced as well. So in other words, forcing you to do it, but hoping to drag you in rather than force you in. So localization, I think definitely will be much more on the agenda, partly for domestic sourcing, but also this whole agenda of trying to establish Russia more as a manufacturing base, a low-cost, well-positioned manufacturing area, so you can export product from Russia to other markets. This is also something hopefully Orishkin will address, because we're hearing this. And then in terms of procurement, so again, we've heard a lot about this with regards to the health sector, different changes there. The Prime Minister is talking about making it easier for foreign companies to participate in government procurement, etc. And again, we'll wait to see what that means. I would expect that we will get more clarity on that through the summer into the autumn rather than more immediately. But at least the good news is the discussion and their inclination is more towards how can we bring more foreign investment in? How can we make Russia a more attractive place for foreign companies? It's not the opposite. It's not a case of how can we protect, you know, Russian companies? How can we protect the economy from imports? We're not hearing that. And this is consistent with the geopolitical stance as well with regard to sanctions. Russia is much more inclined towards trying to improve relations with the European Union, with the core Europe in particular, with a view to improving kind of investment flows. And that's very much part of the reason why we see Russia taking a kind of I suppose what I would still say is a more accommodating stance on Ukraine. We can talk about that later if we wish. But, you know, I will point out that how surprisingly quickly the new gas transit contract was agreed before the expiry of the last one in December. That wasn't expected, but it was done with Putin's order. And also Gazprom cut a check for almost $3 billion to settle the legal claims with Ukrenaftogaz. Again, that wasn't expected, but it reflected the fact that Putin wanted this out of the way so as it would not be an issue in his discussions with Chancellor Merkel or with President Macron, and with trying to re-engage with Europe, because that's where the good business is, that's where the good trade is. I really don't think that this crisis has damaged that. If anything, what we're hearing so far, it has reinforced that message. You need to engage more, particularly with Europe. So on national projects, so we will definitely, this is something we would expect we're going to hear a lot more of and get more information on through the summer and have a better idea of what this looks in the autumn. But right now, it really does come down to a whole debate over what projects can be delayed and which ones should not be delayed. And really that's, I think, is the core of the argument inside government. And as you would expect, there's kind of no surprise here, health is not going to be touched. If anything, probably get more money obviously applied to it. But also housing is important for Putin's social commitments, affordable housing, which of course is also an issue for the central bank and the banks with regard to interest rates. But ecology, I think generally around the world, this whole lockdown, and we can all see how clean the air is. You can see further. It's not that our eyesight has improved, but just the air is better. You can actually see more the distance, etc. Ecology, digital for sure. Again, reflecting the way just economies are going and the way businesses are going, and then some essential supports in terms of trade, etc. So there is plenty of scope within the projects that to allow delays over several years. And, you know, this is entirely in keeping with what we've been hearing anyway. Before the crisis, ministers had all quietly been warning that this is not a 5-year program, it's an actually 8 or 9 year program. And now I think that'll be more openly clarified, so that this, what it was 25.7 trillion rubles is not going to be spent between now and the election date in May. It will be spent sometime before the end of this decade. And that was anyway what was expected. Now I think it'll just be formally adjusted. So we'll be looking to see, what does this mean? Which programs are going to be delayed? And what will that mean for individual sectors and companies? But right now it's definitely an issue, and some are obvious and others will. So I'll come back to that certainly in Q&A. On budgets, I won't really need to spend much time on that. This is the old budget, it will change. Very quickly on rates of inflation, we would expect the central bank to cut, they will at least cut by another 50 basis points on June the 19th. And Governor Nabulina says she wants to cut by 100 basis points. If the meeting was tomorrow, they would cut by 100. Because the ruble is in a good position, there's recovery generally, and therefore to justify, they will wait for the May, obviously they will have the May inflation report. So if inflation in May is somewhere around 3, if it's less than 4%, we'll get 100 basis points. Now, the greater point though is, and this was kind of one of the arguments between Nabulina and Greff, and generally it's the next battleground between the regulator and the banks, is the fact that the banks are charging too much for lending, particularly to individuals, to households, and to small businesses. So the central bank wants to see a move towards kind of more normal kind of arrangement, as we see in other countries, where the bank's lending rate is more closely correlated and with a smaller margin relative to the central bank financing rate. In Russia, that's not the case, or it certainly hasn't been the case. You know, last year when the interest rate was about 8%, the banks were charging up to 20 or higher for unsecured lending, and charging obviously high single rate for SMEs, etc. So they want to bring that down and to force the banks to reduce their lending rate, and banks are being resistant. So it's a battleground, but it will come down. And inflation, just the question I sometimes get asked, because people remember what happened the last crisis in 2015 when the ruble weakened. There was crisis and inflation spiked up to 15, I think 17% in total, and food inflation went up. And that's not going to happen this time because the structure is entirely different. Russia does not import anything like as much inflation as it used to. The central bank has a much clearer handle on the whole inflation control, etc. So really the central bank when they say that the summer range at worst should be 5 to 6%, that's credible. That's about it. They're saying 4% at the end of the year. Again, it's credible. There's no reason to assume it'll be much different. You're not looking at 10 or higher here. You really would want a second spike, the oil price go down to 20, the ruble going to 85 or 90 before you start talking about higher numbers. But even then, you're not going to get the same as you got in 2015 because the structure, simply Russians are consuming more ruble cost goods than they used to. That's a big factor. This is our base case, and we do different scenarios. I'll show you the pessimistic case in the next slide. I'm actually more relaxed about our base case. Let me just show you, sorry, the pessimistic case, because the pessimistic case is kind of more, is closer to what you see from the IMF and the central bank and from others. And the big difference is the oil price. So the central bank are assuming an average oil price of $27, and then on the back of that, they see GDP, they say a range, -4 to -6, IMF of -5. You know, that their best guesstimates, we try to avoid that. We build models, we put in different factors. I'm actually much more relaxed about our base case of 3.5% this year because we see the oil price being better, budget spending. But you could, and yeah, again, you can see inflation, CBR. Retail sales certainly taking the hit, and we saw that in May. So unfortunately, what looked like a very strong hit or recovery in Q1 is going to be much slower. And this will be the sector that will be the slowest. And it is the one with the red warning lights. So SMEs, retail, that means cafes, bars, shops, small businesses, they will struggle. And one of the reasons they'll struggle is because the reality is it is not going to be a priority sector for the government. We are very well aware that Putin does not really believe in the SMEs as a factor in the economy. Others do, of course, and Orishkin and the kind of newer ministers, of course, all get it. They see the need for SMEs and entrepreneurs to be a bigger part of the economy for long-term growth. Putin never bought into that. As far as he's concerned, you should give money to Gazprom and Rostec and the biggest employers, and so long as they're fine, everything else is fine on the back of that. So unfortunately, SME, small business sector, they're getting what they need, which is emergency money and just basic money, but they're really not going to get the sort of support that they need for strong recovery. That will pretty much all be directed towards the biggest companies, the state companies, again, as we saw in 2015 and 16. So retail sector struggling until confidence rebuilds, until income rebuilds. So really you're looking at, you know, almost like the New Year spending season. And we can certainly expect that lots of familiar cafes, bars, shops, etc., will all remain closed for much longer in this crisis. I think that's just reality. But again, you know, you can see here, even in our base case, looking for recovery next year, which is pretty much the global expectation. People are still, I mean, set up by IMF, World Bank economists, are all working on the basis that this is a 2020 problem and next year we'll pull clear of it. And let's hope that is the case and that there's no additional spike. Sorry, the pessimistic case, just put that back up. This kind of more, the outlier is Alexei Kudrin. He's looking for like 9% decline. But do bear in mind, when you listen to Alexei Kudrin, he is a professional pessimist. He is always pessimistic. Even when he was finance minister in the middle of the boom, and the economy was booming in 2005, 6, 7, up to 8, he was always predicting gloom tomorrow. So that's just his nature. And therefore, when he says the economy is going down by 8 or 9%, you know that's absolutely the worst case scenario, and it'll be a lot better than that. So just bear that in mind when you listen to his speeches. He's only happy when he's miserable. And I know him, so I've told him this so many times. So I'm not saying anything out of turn. But here, you know, so the pessimistic case, again, not that bad. It's almost, but it does kind of reflect low oil and maybe even a second hit on the crisis in the autumn, which then drags the recovery into the second half of next year. But I actually don't see that at this stage. but it's nevertheless, we'll cross our fingers it doesn't happen. And just to show you here, and again, these slides are available, will be sent around. You know, for just to show you the central bank numbers, say 4 to 6%. Everybody's hedging their bets at this stage. Finally, and we'll leave time for Q&A, again, just to address this, because there's been lots of headlines in international media about, you know, this crisis is undermining support for Putin, his trust rating, approval are all come down to record lows, and even some commentators talking about this is going to lead to social unrest and regime change, and that's just ridiculous. That there's no evidence whatsoever to support those conclusions. What we've seen over the last 4 crises is that, for sure, every time there is a dip in the economy and people are fearful about their jobs and their, you know, their lifestyle, they reflect it with a dip in the approval rating of those in charge. And then when the economy recovers, we see the opinion polls going right back up again. In addition to this poll here, there was another poll carried out by Levada, which asked people what they would like to see in 2024. And even with these polls here, that polls showed that 57% of people would still prefer Putin to remain as president after 2024. So inconsistent. And the other thing I would say about this poll is that, unlike previous polls, which stopped people on the street and in shopping malls and out and about, this one in April was done on the telephone as people are locked down. So you're generally going to get people in a poor mood anyway, because you're locked in and you're on furlough from your job. So it really doesn't surprise me. Let's see what happens in the June numbers. I think would be more indicative. But the suggestion that we're heading for a period of social unrest, no, that just don't see that. Of course, there's always people who take advantage of these situations to push their political agenda, and that's what we're getting. But there's no evidence of it. And again, most people in this audience are in Russia, and I think you could probably see that as well. Just quickly on sanctions, just it's not gone away. We hear all the time from different senators in the US that they're looking for an opportunity, different reports from security agencies saying, you know, and it's all conjecture. Russia may do this or it may do that or it may be interfering or whatever. I mean, it just shows the attitude in the US is still, if there's anything that can hit Russia with more sanctions, they will. And that's affecting inward investment. And we're not going to be clear of this until after the election, one way or the other, whether Trump is re-elected and there's no point in attacking him, or there's somebody else, in which case there'll be a different, again, Trump, who's really the divisive figure in sanctions and is really the cause of a lot of sanctions because Congress is attacking Russia or attacking him via Russia, etc. One way or the other, it should be better after the election. But between now and then, it's still dangerous. In the meantime, as I mentioned, Europe really making more solid efforts to re-engage with Europe. And that means we had certainly hoped that there would have been a Normandy meeting by now. It was scheduled for April, and we were expecting some concessions or some agreement to move forward with some changes in Donbass, maybe with the OCSE or whatever. Hopefully that still will be the case. And I guess it's certainly we hear from Zelensky and his comments in Kiev now that he has the IMF deal sorted out. He also wants to now focus on the economy in Ukraine, and going forward with Donbass in some way or other is obviously good for him as well. And then finally, future growth. Oops, sorry.
Can I ask you, Chris, could I ask you something from Moscow, because I have to run for a couple of minutes into another meeting. I have one question I'm very, very interested in. We do now see for a couple of months the new Mishustin government operating. From your point of view, who are the heavyweights in the government? Who is losing? Is Reshetnikov, the economic minister, after Putin gave him a dressing down publicly, already finished? And what are you expecting in the future from these girls and guys?
Yes, yeah, good question, because I think we definitely always kind of viewed this government anyway as one that was more temporary and that was likely to change possibly as maybe as late as the Duma election, but maybe even before that. So yeah, I think definitely the changes that were made in January, February, kind of more reflected the fact that people have become frustrated with the old team and wanted more progress with national projects and with implementing, what we talked about. So I think there was an element of putting people in place to test them, to see how effective they would be. So I'm definitely expecting changes, and I think these changes will be determined by how quickly the economy recovers. In other words, we as we know from Putin and his style, he's not going to make too many changes in the middle of crisis. He'll wait until we're getting clear of it, and then he'll make the changes to move forward. So in terms of who's in, who's out, I think that first of all, there's no doubt that Mr. Sobyanin's position has greatly improved in the midst of this crisis. The opinion polls show it. The airtime he gets, and the fact that Putin kind of allows him so much scope and is really kind of almost using him to some extent. So Sobyanin's kind of credentials for having a more important job in government have definitely been strengthened. And the fact that he's actually been attacked by some kind of pro-government media that are controlled by other people also is always a good indicator that other people see him as a threat to their position. So Sobyanin definitely moved well up, and we know in any case his ambition is to eventually be prime minister, and I could certainly see that happening. Perhaps with maybe not later this year, but perhaps early next year, I could see a government reshuffle and Sobyanin taking over the position of prime minister, or maybe something at least important that would reflect his importance. I think as to whether Belousov or Siluanov kind of prevail, that's a battle to watch, because it also reflects policy. Siluanov is a very conservative individual. He would be inclined to kind of keep the deficit as low as possible by reducing spending where he can, etc. Whereas Belousov is more about, look, we have money, we have scope, let's just go for it and spend our way out of this. So that would be important when it comes to national projects. And we know and we'll probably get the first indicator of who's prevailing when we see the first budget. So I think Mishutin anyway was only ever temporary. His job was there to get national projects out of a rut and moving forward. Nobody I talked to believes that his position was ever other than temporary or a couple of years. He'll probably be brought into the administration. But right now, you could certainly say, if you were putting down your money, you'd say Sobyanin now has the strongest credentials for that job. And unless he screws up massively over the next couple of months, I would say his claim to that job will be strengthened. And he has been campaigning for it. I think I was actually listening to him when he launched his campaign. It was in January of last year. If you were at the Gaidar Forum in January 19, he was at a panel with Siluanov and Kudrin. He was the third person, and they were talking about spending in national projects, and Siluanov talked about all the resources that were going to be applied and the government support for it as a theme. And then Kudrin spoke secondly, and he talked about the need for, the usual need, let's be conservative, or let's be careful, we can't throw money away, it'll all be stolen, the usual. And then Sobyanin spoke third, and he looked at the other two, and he looked at the audience, and he said, I don't play politics, I'm not a politician. He said, you know me, I'm the person who gets things done. I thought, there you go, it's the election slogan launched immediately. So anyway, that's what we're watching. Sobyanin in Prime Minister temporary. Some other people will be collateral damage depending on how they perform in the next few months. We're watching that battle between Siluanov and Belousov.
Okay, thank you, Chris. I say goodbye for this moment. I have to join an AHK Europe meeting, and thank you for this outlook. I think I found many positive things in it. Protectionist not winning the war to 100%, financial macroeconomic stability, and of course the consumption of alcohol increasing. So many good news, and I wish everybody another splendid 20-30 minutes and a nice, successful and healthy day. So excuse me, and good luck to everybody.
Okay, thank you very much for arranging this. I'm just going to wrap up and then we can go to questions. And I just actually reflect what I say. We prefer to position ourselves as pragmatists because I know people who are generally more negative kind of say, well, you know, you're being too optimistic, and generally we, you know, over the last few crises, it is something that's always, you know, we hear say people think, look, our business is really bad, you should be more negative, but really, you know, we do see ourselves more in a pragmatic role, and we look at very closely at what the evidence is, and we consider. We avoid emotional reactions, emotional response, leave that at the door. And therefore we do a lot of detail in our scenarios, looking at, you know, what can happen in different sectors and what the impact can be. And of course, what sometimes is a negative can also be a positive. And one reason why sometimes we get accused of being maybe more optimistic, although, you know, generally then proven right, is that if you look at, say, some obvious parts of the economy, as mentioned, SMEs, the retail sector, you know, hospitality, yes, no question about it, those sectors are going to be very badly affected, and GDP in that sector will probably be down at least 10% this year. But the bad, you know, this is too small a sector of the economy, and that's the bad news. Russia has never developed SMEs properly and entrepreneurial properly, and this is a huge problem for long-term development. We know economies don't successfully grow and don't mature and don't sustain high levels of growth unless they've got a very active SME and entrepreneurial base. And you see in countries like, say, China, Brazil, elsewhere, SMEs account for at least 70% of GDP. In Russia, it's somewhere 20 to 24. So that's a huge problem for long-term growth and development, but it means that in the period of crisis, it's too small a number to affect the headline. So the big companies, therefore the state sector that will get Putin support, will get government support, they will recover faster, and they'll affect the bottom line. So the headline. So you've got to differentiate. So GDP at a headline can still restrict that contraction to 3.5%. But if you're looking at SMEs and services and small businesses, it'll probably be 10%. So there is that difference there. So I'm just going to go back to finish off where I was in terms of the, so how do I share the screen? What did I do to, yeah, sorry, hopefully that is, now, is that sharing? No, it's not, sorry, what did I do?
You just increase your screen and then click on this green button, share screen, on the bottom bar.
Yeah, I'm sharing it. It's not working this time. I don't know why that's not the case. Okay, maybe that one is that one working? No, it's not. Sorry, just to get back to where we were. No, it's not working. Sorry, apologies. I don't know why that's not working. It was a minute ago, but I really just wanted to. Anyway, I do apologize. It's I don't know why that's not sharing this time around, because it was a minute ago. Anyway, it doesn't matter. I think we were nearly at the end anyway. So it was really just a case of the sectors that are doing well, and here again the list is fairly straightforward. The sectors that we can see where recovery is strong. It's, you know, telcos, technology, fintech, but renewable energy, the environment, and the whole area of ESG. I expect these areas to be strengthened as a result of this crisis, and a lot more focus on these sectors compared to what we had before, and sectors that likely to struggle. Obviously, the retail, shopping malls, real estate, offices. Again, you know, you see opinion polls around the world showing that a greater number of people intend to kind of continue work from home, kind of as a longer term lifestyle change. So the need for offices maybe would be less. Traditional banking services obviously be less as fintech grows. Autos, maybe we'll get more of a push. We know Orishkin is very keen to push Russia more into electric engine development rather than spending more money on parts or components for combustion engines. Generally chemicals, plastics, maybe losing out in favor of more renewable projects. So really that's kind of, I guess where, finally, sorry, just as we come to an end, this is the list I wanted to show you on the, just on the sector. And I say this is something that in macro we will be spending a lot more time on in the next few months as we see what the government reaction is, as we see from kind of demand side how it changes and our global trends. But really the indication so far is these are the sectors that are likely to emerge kind of with more momentum. And I would put it like that. And sectors maybe with less momentum. So clearly the oil industry is not going to disappear as neither are other sectors, but momentum probably will slow. And again, it really depends on how quickly we all kind of get used to new life with COVID, or if somebody comes up with a vaccine tomorrow and we can all go back to normal, then I guess the momentum will be less in terms of negative. But this is kind of what we're now looking at, and I guess this what we hear from investors and where we see the level of interest. So we always reflect what we hear from our clients, and that basically is it. And in this presentation, you'll see there's more detail on our different scenarios, which you'll get from the presentation as it's shared. So let me wrap it there, and I'm happy to take any questions anybody's got and clarify any points and go back over any slides that anybody would like to.
Dear Christopher, thank you very much for this briefing. I think this was very valuable information. Now there's the opportunity to ask some questions in the chat. There was the question whether we will share the presentation afterwards. I think the answer is yes.
Yes.
We will send it out to all the participants afterwards. This is no problem. And I see here another question from Mr. Kanarski about the growth prospects. What about the real industries? How much do you see a decrease in the industrial investments?
Sorry, you broke there again. How much to industrial investments?
Yes. How much will there be a decrease in the industrial investments?
Yeah, that's well. Actually, in terms of the numbers that we're using, now just to put into context, in 2008 there was a 4.5% increase in industrial investments. Last year was 2.5%. This year we were expecting 4.5% increase. And now we're looking for a contraction of 6%. So a very kind of major reversal in terms of in investment. And again, the anecdotal evidence certainly supports that. The companies we talk to, of our clients, are all saying to us that they have had to delay and have been told to delay their investments. And it's pretty much across the board, and it reflects the uncertainty. So at this stage, I suppose the good news is you can say we're not seeing any kind of permanent cancellation of planned investment. And we're also not seeing anybody delaying their investment because they think that Russia is no longer an investable country, or that it's something has fundamentally changed in Russia, which would no longer justify the planned investment. That's not the case. It is more of reflecting the fact of the huge uncertainty in terms of timing, both in global as well as Russia and the region, and that's what's causing the delay. So it really, therefore, if you want to, be optimistic, you say that this suspension of projects, which is leading to this contraction in investment spending, both by the government and by companies, is more reflective of what should be a temporary event. If you want to be pessimistic, you would say this temporary event is going to change, excuse me, the outlook, and therefore investments will no longer be justified. So I think the pragmatic answer in the middle is it really will depend on the sectors. So if you were planning on investing well, it's not strictly in the area, but like to build a new office block, you probably will now think twice about that, because you think, is the demand for that office space going to be there, or in what shape? You're pretty much literally going back to the drawing board. And maybe if you were planning on building, some sort of a shopping mall or something like that, yeah, you've got to be, I think you really have to go back to the drawing board and think about how the world has changed. On the other hand, if you were planning to build a distribution warehouse to cater for growing online sales, you're probably not going to make that bigger, because this is a permanent acceleration in online commerce that we're seeing everywhere in Europe and in Russia also. So I think it'll be very much reflect, and some of our, excuse me, our clients, this is what we do at the strategic analysis part of our work, where essentially we help companies figure out how many widgets they're going to sell in 3 years or 5 years time, and what they should be doing about it now. And so a lot of those kind of assumptions that companies were using in terms of supporting those kind of budgets and forecasts and expectations for the next 3 years, they at least have to be revisited, and they certainly will have to be changed over the near term. So that in itself is causing this suspension of activity and plans, but we certainly hope it'll be more of a temporary nature rather than permanent, but it'll depend on each difference. Each sector will be different. Some plans will be cancelled, others. And I guess a lot will depend therefore on national projects and how open the government will be in terms of bringing in foreign investors and co-investment into national projects. If, as they're indicating, they want to be more encouraging, that'll be good. And that means expanding the so-called regulatory guillotine, which is going to get off the agenda a bit. But we did hear that from one minister just recently, saying that they expect that to be expanded rather than delayed. And if that's the case, it'll obviously be helpful. But in any case, the whole, negative backdrop of US sanctions threat was always going to be a factor for this year. And let me give you just one very quick anecdote just to reflect this, to use time. And it was a foreign company who came late last year, so it was pre-COVID. And what this person said to me, from deputy chairman of the board, he said, we're sitting back in headquarters, we are looking at TV and seeing how bad Russia is and the negative stuff about Russia, but yet our P&L is getting better. And activity in Russia and our people in Russia are asking for more resources. And he said, finally, we decided one of these two people is lying to us. Either it's the media or interpretation, or it's the people in Moscow. He said, so I decided to come to find out. And of course, after spending a week in Russia, he can see that the local operation is good and the people on the ground are being honest, and that there's an exaggeration perhaps in Russia threat. But then he did say, he said, you know what, I understand that, but I'm still not going to sign off any new investment until the threat level has gone down. So I can see we can make money in Russia, but I'm still delaying the investment decision until we're in a safer position. Now, interestingly, that same person called me in early February, again, pre-COVID. And he said, we're hearing that one of their competitors was talking to the government about building a facility in the regions and possibly getting some, like a tax break or some incentives to do it. And they were now starting to more worry about that, losing out on competitor advantage. So that you can see that whole dynamic. Obviously, now with COVID and with the economy, they don't have to make that decision. But you could actually see pre-crisis companies that were making money, were planning to expand in Russia, but delaying because of the kind of risk perception. We're then starting to worry more about being too late, and are now kind of obviously in a different waiting game. But in generally, the momentum was improving in Russia rather than it being negative, is essentially what I wanted to say.
Thank you very much, Christopher. In the chat, I can see 3 more questions. I will combine them because they are connected, I think. The first question is, when will the foreign capital investments in the Russian market return to the pre-crisis level? The second question is, how long will it take to reach the GDP 2019 level again? And also, could the exchange rate ruble-euro be on the level of 70 rubles again in 2020?
Yeah, look, I think in any case, a lot of these answers are very dependent on the oil price, and we could spend all day talking about the oil price and still be wrong. Of course, because as we've seen, the volatility and the politics and all of the different factors that are at play with oil, and there's no doubt that there is a link. So if you take the view that the oil price will be stable, or generally around these levels, maybe with some volatility down to 30 up to high 30s, then you could see the ruble euro rate at 70 probably early next year. In fact, I would, I'm not going to publish it, but I would certainly, actually, sorry, we do have an optimistic scenario. The optimistic scenario sees a GDP contraction of only 2% this year, and it sees just to remind myself, sorry, we'd go up here. Okay, so actually if I can share that screen with you just for a second. No, I can't. Sorry, I don't know why I can never. Oh, here I can. I do apologize. Share the screen. So here are basically our three scenarios. So the 89, then optimistic. So the optimistic scenario, which implies an oil price up towards $40 at the end of the year, and here you can see that the ruble dollar at 68, and you're looking at the euro ruble sometime at the end of next year, so certainly 2020 average. That I think is optimistic. So I suppose therefore you could say the answer to the question about when we can go back to 70 again, you're looking at the back end of next year based on what we assume will happen with the oil price. It is very dependent on the oil price. Now, it is possible the oil price could certainly spike up to the mid-50s sooner than that, in which case we will get up to 70 closer. But it's unlikely, just because US shale would recover so strongly and it would increase supply, and that would act as a natural depressant on the oil price. So my optimistic scenario is for the oil price to drift up towards the mid-50s into next year, and that then would bring the ruble dollar rate back to where it was at the beginning of this year, around 62 and 70 or so against the euro. So you can be optimistic and say that we could see this at the beginning of, the middle of next year. In our more base case scenario, we see it at the end of next year coming into early 2022. And that's again, but it's very dependent on the oil price, as I say, because that will be the more important factor against even the backdrop, because the oil price, of course, also has a very clear link with the budget. And so the higher the oil price goes, then the more budget spending there will be, and that will strengthen the economy anyway. So it tends to go hand in hand. So really it does depend on your oil price view. And so based on our optimistic scenario, we get back to 70 against the euro next summer. On our base case, you get at the end of next year, early 2021. And as I say, very much dependent on the oil price. Oil price spikes, we get there a lot quicker, but it's unlikely. And in terms of the economy, again, I guess the answer is still the same. We are looking to get back to GDP levels the same as 2019 on a dollar basis or on the euro basis by the middle of 2021. So in other words, 12 months recovery for there. So it's not that bad. And again, I know that's inconsistent with if you were to look at maybe IMF or with some other commentaries that come out of the usual think tanks, but particularly the Washington-based think tanks. They would say I was crazy, but then they said I was crazy in 2014 and 15, and we were right. And it's because we take the emotion out of it and we look at what's actually happening. And in this case, what's critical is Russia does have a lot of financial resources. It has something it can deploy. It's not looking to borrow money. It's not looking to cut. It's not looking to survive. And that's a big difference between this crisis and previous crisis. It's not looking to survive. And the second difference between this crisis and others is there is more of a need from the administration to recover, to deliver, because Putin has promised people certain improvements in their lifestyle and in the economy during the remainder of his term. And he really does want to deliver on those. So there is a political element to deliver on promises, which maybe wasn't there before. There are resources in the bank which weren't there before. And I think even the oil market is in a better place with regard to cooperation in OPEC Plus than we've had before. So I really absolutely, well, I maintain a pragmatic stance. That pragmatism is leaning more towards the optimistic side than the pessimistic side of this, and there's good reason for it. So I think a 12-month hit by the middle of next year, I think we should be in a much better position, unless you think there will be a second round of the virus which closes down the global economy again. That's the unknown. That happens, then we are definitely looking more towards the pessimistic case. If it doesn't happen, the cautious recovery is very consistent, at least with our base case, and maybe even allow us a bit more towards our optimistic case. That's the critical factor, in my opinion, because that'll affect the oil price as well on the demand side.
Okay, thank you very much. I think we have time for one last question, and I can see here from Alex. What do you think about the protectionist measures of the Russian government for the Russian producers, such as Decree 616 from 30th of April of 2020, which forces to buy Russian-made products? And in which way will it influence foreign companies who work on the Russian market and who sell their products in Russia?
Yeah, this is kind of what I was saying about localization, kind of it's, you know, and the implications of localization. We hope it doesn't revert into protectionism, because there's already some discussion about that, even in Europe, as we see. Obviously, I suppose some of it is a political reaction to China and the criticism of China, its handling of COVID. But, you know, the US has certainly been more open, but even in Europe, talking about the fact that Europe had become so reliant on imports from China, and that has left the European Union economy more vulnerable, and therefore something should be done about it. So this whole theme of localization and protectionism is kind of beginning to emerge anyway, and I expect it'll be more of a debate when we get clear of the crisis. This will certainly be more of an issue about this kind of globalization and localization. So in Russia, for sure. Oh, sorry. I think, first of all, what we know is, what we've heard from different government ministers is that they have no intention of, so hopefully that won't be the case. But localization is definitely, I said, going to get more of a momentum, kind of more impetus. But what I hope, and what I've been indicated, but what I hope is that would be more incentive-based, at least to start with, rather than barriers or exclusions. So Russian producers, Manturov has said, and others have said, is that there's not going to be any differentiation between foreign companies making a product in Russia and Russian companies making a product in Russia. The key is that it is made in Russia, and no matter who makes it. And then you get down to, well, what is the definition of made in Russia? You know, it's not as clear as, you know, you have to make everything. It can be how many components or what enhancement or value added. These are the issues that will be clarified. It is by certainly no means, it is not at all clear from that decree, what does made in Russia mean? What we have been told is it does not discriminate against who makes it, just preference for made in Russia, and it does not clarify the percentage content of made in Russia to qualify under this requirement. So I would see this as a first step, and I think in the next few months, as we see the government reflecting more on recovery strategy and changing their different industrial strategies, we're going to get a lot more clarification on this point. But in general, there will be a leaning towards more made in Russia, but the assumption is that that will also be hand in hand with different incentives to make companies, or to encourage companies to make the product in Russia. As we've got a Rishkin tomorrow night in HK, let me just say, reflect on one thing that he did say before, which kind of, I suppose, reflects his thinking. And remember, he's now in a very powerful position still as advisor to Putin, and localization is his theme. It's his baby, as it were. A couple of years ago, or maybe a year and a half ago, he was asked to clarify the point of localization and made in Russia. And what he said was that his view was, and what he was pushing was that Russia should not be dogmatic in terms of make it or you can't sell it. He said we've got to reflect what can be made in Russia in sufficient volume and in the right quality. And we should really push made in Russia for those products and not push made in Russia for products that simply Russia cannot make adequately or in the right volume. And these two examples were a box of cereal and an Apple iPhone. He said in a couple of years' time, we will have enough Russian-made boxes of cereal of the right quality, and then he said we will close the border to imports competition. Whereas we have to understand that we cannot make a Russian iPhone, therefore we will never block the import of iPhones. So that was the two examples. Of course, he was immediately asked about the first one, saying you're a member of WTO, you cannot put barriers to imports, even on products you can make. And his reply was very quick, which obviously reflects they thought about it. His reply was, there is not a Russian bureaucrat worth the description who cannot keep the WTO busy at the border for at least 10 years or longer. And then he added for good measure, he said, because everybody else does it. So that's, I think, is the thinking, is that if there's like a tire or a windscreen, you should be making that in Russia. And if you don't, you'll probably find it very difficult to import and to sell it here. On the other hand, if you're making a sophisticated product, something that can't be made in Russia or not well, then there's no intention to block you from this market. So I think that's what we get, and I hope Arishkin will clarify that when he speaks tomorrow, but this is very much his theme. He hated the description of import substitution. He also disliked the description of localization. He preferred to talk about Russia being part of the kind of global supply chain where you should be able to bring in some products, add value, export them, and then buy the finished goods. And so I think, you know, as long as his position prevails, then I think that's fine. It's very basic. You say, if you're making a tire, you have to make it here. That's very clear. If you're making something else, sophisticated or some medicines or something like that that can't be made here, then that's fine. But I think we just have to, this is a topic that will be very, very important for all companies. And Decree 616 is a first step. I would have no doubt that we will see this change and be enhanced and elaborated on and clarified by the time we get to the autumn.
Yes, thank you very much. Actually, Mr. Shep has just reached out to me. He has returned from his meeting and he would like to ask yet another question.
Yeah. Okay. Yeah, indeed, I gave my short presentation there quickly, and I do find this meeting with Chris much more exciting and interesting than the meeting I was in for a couple of minutes. So happy to be back. In case the question was already asked, then just drop it. I wonder what you are making out of the referendum on the constitution Putin is planning, and what is your latest? When will it take place? And what do you expect? Any further changes in the power elite around this referendum? Is it harder for him now, or is it easier?
Yeah, I don't think it's really changed a whole lot. You know, again, the opinion polls show, as recent as just 3 weeks ago from Nevada, it shows that people are still very supportive of all the measures. As I mentioned, 57% said that they would prefer to see Putin remain rather than maybe the uncertainty. Of course, we all know for globally, these things can be very fickle. The reason why people say they want Putin to stay is because they're not aware of anybody else. So it's either a known quantity or uncertainty. If there was somebody else proposed, then we probably get a different answer. But we know that's not the case. So I don't see any changes. We still don't, cannot say definitively that these changes are designed to allow Putin to stay, or that he clearly intends to stay. I think the whole purpose of this referendum and these changes was to prevent the growing infighting that we were seeing. And in the US, there's obviously expression the last couple of years of a US presidency, they refer to it as a lame duck presidency, because the president is leaving and therefore everybody is positioning for what comes next. And therefore, we already saw that starting very early in Russia. There were some very open disputes between Mr. Chemysov, of course, and Rostek, and Mr. Sobyanin, we've already talked about, but other disputes were starting. And I think Putin made this move partly to basically say, well, I might stay, don't automatically assume I'm going to leave. Therefore, you have to assume I might stay and probably will stay. And therefore that should end, or at least minimize any of these kind of disputes around them or undermining him. And also, I think one reason why he's done it is because of what's happening in Kazakhstan. If you're aware, President Nazarbayev, of course, retired early, and his plan was to use President Tokayev as his proxy and still to control. But what they found very quickly is that a whole group of new people started to come together around Tokayev and essentially saying, why should you listen to the old guy? He's gone. You're the new guy. You do things your way. And that was causing a lot of instability in Kazakhstan, and already has, of course. Now we see President Tokayev has strengthened his position even more with the removal of Nazarbayev's daughter. So again, I guess Putin's plan A, I still believe his plan A was similar to Nazarbayev's, which was to retire into a position of power with the Security Council and then have some alternative that he could work with, maybe Dmitry Medvedev style character, and then he would be able to continue his program of changes kind of for the next 6 years. And now there's a big question mark over whether that was actually a viable strategy or not, based on what you see in Kazakhstan and what was already happening around him. So I think that it's still not clear, but more likely he probably will stay for 6 more years. So I don't see, therefore, any manipulations. I don't see anybody kind of strong enough to undermine him. Clearly a lot can happen in a couple of years in politics. But I will finish by this. So first of all, I see that constitution going ahead, the changes being accepted. In terms of the timing, there was some suggestion it might happen on the same day as the victory parade. That seems most unlikely. That would be a logistical nightmare for the police. It would be crazy to do it. So I think it's unlikely, but I still think we're very likely to see it in July. I think they'll want it out of the way before the autumn. And remember, of course, it has to happen 12 months before the next parliamentary election. So if the parliamentary election is September 21, it has to happen before then. So my guess is unlikely June 24th, but very likely sometime in July. And I think it'll be a formality still. I don't see Putin's position being undermined domestically. But just to finish with one very good, if you look for an interesting book to read on this topic, it's called Authoritarian Russia. It was published a couple of years ago, and it was published by an author called Professor Gelman, who's Finnish, but he lectures in Leningradsky University. And the book was, even though it was called Authoritarian Russia, it actually is about authoritarian regimes around the world, how they developed, and critically how they ended. This is the most interesting part, and therefore how they end. And what I remember from his study was they end not so much when people get fed up with the leader, but when the people around the leader see their position endangered because he's becoming no longer popular or viable. In other words, those people, just use like Mr. Sechin and Mr. Chemysov and all of these, Mr. Rottenberg and all these people who made us so much money and have a very powerful position in Russia. But if Putin was to deteriorate and therefore lead to a risk of public backlash and protests, then they could also be undermined. There could be investigations. There could be anything, changes with the next. We see what happened with Ukraine as a very clear example. He stayed on too long and therefore endangered Mr. Komolevsky and all the other oligarchs. This is the key message from Gelman's book, is that it is usually the people in this position with wealth and power and influence that don't want to be in this position. If they see the leader as a problem, they get rid of him. And we saw that most recently in Zimbabwe, where Mugabe was tapped on the shoulder and told it was time to resign because his plans to bring his wife in as leader risked a civil war, a revolution, which would have brought everybody down. So that's what you watch. And of course, linked to that, I guess, is popular support and public support. And there's no evidence whatsoever today that that is a risk. His position looks solid. And as much as anything else, it's solid because there's nobody else. And these different groups at the top of Russia, the different elites and Siloviki and all the other descriptions, they need a more neutral person in the middle. And there's nobody else to take that role, nobody obvious anyway. So right now it looks like Putin's position is safe. And if you were a betting person, you'd say he's very likely to stay for one more term to 2030. And maybe by then leave rather than not. So I don't see anything that puts that into question at this time, either in terms of where we're at in the economy, what's happening with the opinion polls, what's happening with the elite, or his own indication. That looks like it's going to be the progression at this stage.
Yes, dear Christopher, thank you very much. I see no more questions, therefore I suggest to come to the end now. I thank you very much for this very interesting and informative overview. And Christopher, actually we'll see you very soon again. Tomorrow we will organize our AHK Treff, where you will also give a brief lecture. We would like to invite everyone to participate tomorrow. The presidential advisor, Maxim Oreshkin, will also speak there, and I think it will be a very interesting event. And all the participants will receive small bags delivered to their home with wine, snacks, and also a flyer from Macro-Advisory, where they will receive further information about you, and there will be also contact details, so people who have further questions to Christopher can ask them afterwards. Many thanks, dear Christopher. Greetings from Moscow to London.
Can I give you my address in London for the wine and snacks?
Okay, let's try.
or can I get an IOU and get him as soon as the airports reopen? I'll be back to Moscow. Okay.
We will try to replace the wine with whiskey.
Thank you very much. Okay, see you tomorrow.
Thank you very much. Goodbye.
Bye bye, everybody.
Thank you. Bye.